The Empirical Energy Podcast blows open the silent revolution, rewriting the rules of global energy markets. Measured, verified energy is no longer an alternative. It's becoming the gold standard. We dive deep with the producers, traders, consultants, and renegades driving this seismic shift. Step inside the raw mechanics of how verification and blockchain-fueled trading are dismantling the old systems and creating a future where alternative energy doesn't just compete, it takes over. This is the movement of reshaping energy as we know it, bold, unstoppable, and just getting started. Here is your host, Mark Smith.
Hey everybody, this is Mark Smith from the Empirical Energy Podcast, and I'm here with Brad Handler. Welcome, Brad.
Thanks, Mark. Pleasure to be here. Thanks for having me on.
So Brad, a few months ago, interviewed me, to include in this white paper, which you see on the screen, the tokenization of environmental attributes of LNG. And we want to talk about this report because I think it's really important in the current evolution of EACs and in light of what's been happening in the market. For example, announcing that EU has agreed to buy $750 billion of LNG from U.S. operators. That's a big deal. So I'm sure more and more U.S. operators would love to know, well, how do I get a piece of that $750 billion? What do I need to do? Does EACs have anything to do with that down the road? And we could talk about all that stuff. So anyway, before we get into that, and there'll be a link in the show notes so you can get access to this report. So before we get into that, Brad, why don't you tell us about yourself, about the Payne Institute and how it kind of fits into the broader conversation about energy, the growth of energy, worldwide, and energy transition, and so on and so forth.
Sure, happy to. And again, Mark, thanks for having me join you. So personally, I was an equity research analyst covering the oilfield services sector. So I was a sell-side analyst working at various investment banks. I did that for about 20 years and left that industry to explore policy and came to the Payne Institute really in earnest. I guess I dipped my toe in it first, and then came in earnest about 4 years ago. So the Payne Institute sits inside of the Colorado School of Mines, and its mandate is sort of twofold, but we bring a policy lens to a number of the issues that our great faculty at the School of Mines tackle every day. So that includes a number of subsurface related issues. So the main programs we have at the Payne Institute include critical minerals related, oil and gas related, and that's where we're going to come back to with this, geothermal, CCS. We also have a Native American sovereignty initiative that's a lot of fun and terribly important to us. But that's the sense of Payne. So my role now, it's evolved a little bit, but I'm running our energy finance lab. And so I lead the finance and economics research that support all of those Payne initiatives. And again, coming back to the oil and gas one, the initiative is called the Accelerated Methane Reduction Initiative. And obviously that comes into play in our discussion today. So AMR focuses again on the responsible production of oil and gas, and that includes limiting the amount of fugitive methane. We believe that's the best path forward for the oil and gas industry, to focus on what it can do relatively easily like that. And such actions to lower emissions need to be transparent and independently verified. We're obviously going to talk about that a lot today, but that brings us to the tokenization topic.
Yeah, and I actually met you a couple of years ago because you have an annual event that you actually run that's, I think, at the Colorado School of Mines. Tell a little bit about what that is, because I think it's coming up, the annual event.
Yeah, you are right. In March of every year now, I think we've had 3 so far, so we'll hit the 4th in 26. We do our annual methane reduction symposium, and a lot of the focus there has been very sort of upstream oriented, how progress in terms of the technologies for measurement, progress for the data analysis, and I know we'll talk about that in this session, but that's terribly important because it's not straightforward. And in a sense, the why, right? So the market opportunity of capturing and selling that methane as opposed to sort of fugitive emissions. There are obviously other areas that the lab touches on. We work to to some extent also sort of unrelated to this conversation, but we work on things like plugging of abandoned oil wells, right? Because those are also fugitive methane emitters. Similarly, there's interesting work to be done in marginal oil wells, but you can sort of see it coalesces around this idea of responsible management within the oil and gas space.
Okay, so what motivated you to, write this paper about tokenizing environmental attributes for LNG specifically?
Well, part of the work that I do has been focused on carbon markets. And I'm very interested in how environmental attributes can act as like a basis for funds to flow towards climate mitigation activities. And so I didn't necessarily start out focused on LNG per se, but rather some of the other issues I just mentioned, like plugging oil and gas wells for carbon credits and the like. But my entry point into this area was a review a couple of years ago of the environmental attribute credits that had emerged in 2020, 2021 timeframe that were tied to low fugitive methane natural gas production, also known as responsibly sourced gas or differentiated gas, just for some of your audience that might have heard those terms. And those credits were created to allow the unbundling of the attributes from the gas itself, right? And to trade those separately and to derive value for those separately. I feel like the conversation has morphed somewhat with those not doing particularly well. We can talk about that, but it's very much tied to this conversation of trust and all that. But the focus now, and I think the focus within some of the same players that were creating those EACs, is more of an emissions label for a producer of LNG to sell their gas to a buyer. So it's a bundled product, like here's your gas and here's your label that gives you the carbon footprint for it. What became clearer in our earlier work is that capturing the data and analysis surrounding the attributes would be a very important part of establishing trust. In other words, to make buyers believe the environmental attributes being claimed were legitimate, the process would need to become far more empirical than it was, as well as transparent.
So how do you differentiate between like carbon neutral LNG and empirically measured or tokenized LNG?
Right. And so the early days of this process had a number of different ideas that were, there was a lot of overlap, but similar. Well, let me take your question and maybe answer the last part of it first, because we can start to break some things down. So empirically measured and tokenized don't have to be the same thing, right? The environmental attributes of LNG based on emissions factors or other estimates, which is exactly how it was done at first, right? You had sort of the EPA sanctioned emissions factors associated with different hardware, and that's what drove emissions factors. That's what drove estimates. But whatever the basis, those can all be tokenized, right? Information, you know better than I, information can be tokenized, whatever the quality of that information. Measurement just makes the characterization of those methane emissions in natural gas a lot more accurate. We can differentiate a little bit. I also think it's worth pointing out that tokenized LNG is not intrinsically lower methane emissions LNG. So it isn't the same thing as saying that the natural gas is differentiated or responsibly sourced or any other similar label. By tokenizing the environmental attributes, you're simply creating a record or an accounting of the attributes the gas does have. But I get your point that generally speaking, we're looking to the tokenization to capture the oil and gas industry efforts to produce lower methane emissions gas. So let's work on that basis. So now to your question, carbon neutral LNG was introduced as a concept to help say, hey, we've got, environmentally friendly gas to sell you. But unless I'm missing something, and maybe there were efforts made that I'm not aware of, what was generally happening was that a seller of that LNG was just purchasing carbon offsets off to the side to marry up so that the seller could represent that it was carbon neutral. And those offsets might have nothing to do with oil and gas production. So you might buy offsets to preserve forestry in Latin America, but that obviously amounts to a certain CO2 equivalent value. And so you would lay it on top of your LNG cargo and say, hey, it's a carbon neutral thing. But this is I think the conversation we're having about tokenization is totally different because we're talking about things that are endemic to the gas production itself, not some outside effort to help neutralize the emissions.
So in your report, you outlined several pathways to tokenizing, the LNG attributes. So kind of explain, some of those, pathways.
different pathways.
Yeah.
Well, you can steer me as you want, Mark, or as you think it's important, but I a lot of times I keep coming back to the original processes and the data capture, as opposed to somewhere down the road in terms of the data analysis. So the most important different pathways kind of comes back to what I've started to talk about. Any information can be tokenized, but we're focusing on the tokenization of measured, of real empirically determined, derived data. And so that data not only has to be sort of measured, which gives it more fidelity, right? And you're dealing with real things, but it also needs to be processed and analyzed using best-in-class standards. And that's not so straightforward. We can come back to that as well. And so you're talking about something that's really kind of fundamentally different in terms of data capture than we were talking about in the earlier days, now 5 years ago, 4 years ago. So if I turn then to the tokenization process, and with the caveat, and you've gotten to know me a little bit, I'm still relatively new to this, and I'm not so much the IT person that I could be. But I guess I'd start by suggesting that the consistency in what Clean Connect and what others are doing seems more important to me than the differences, right? And so let me hit on a couple of the consistent parts, and then I'll come back to some different parts. Now, to start, like this data that we're talking about that's being measured, more of you are now facilitating automatic ingestion into a data aggregation platform. So you're avoiding the human being going out and punching something into a pad and sending it. Obviously, that avoids human error. That's a plus. What I sense is that the platforms are then, they're kind of maybe in different ways, but they're all basically tying together the various forms of methane measurement. They're using some form of data analytics to make sure it all ties together coherently, timestamps and other. They have to tie it to the production data itself to make sure you're talking about the same molecules. And that all allows the calculation of outcomes like methane intensity certifications. And I sense that most are doing those calculations, at least in accordance in some way, maybe some more formalized than others, but in accordance with the standards set up by the various methodologies, right? So the ISO standards, for example, are going to recommend a certain set of protocols. They're trying to follow those protocols for the data analysis. So then the industry it's capturing all of this information in a digital twin, right? A virtual representation of the natural gas volume. The twin is then tokenized by uploading it into a sync domain via a smart contract. And these tokens are generally referred to as environmental attribute certificates, or EACs. So those standards are being followed, I think, by several people in the industry, and those are the consistencies. Missing of an important one, right? Then the tokens are stored in distributed ledgers to make sure the data is immutable and made available as needed to different constituencies. So again, there's probably more consistency. There's some level of consistency in doing that as well. But coming back to your question about differences and highlighting some of those, there are a few that we can see. One is the scope of service of different providers. So, hey, you work for Clean Connect, so I'll mention Clean Connect. I know you present that you represent, that you provide a more comprehensive service than some other providers, right? Some other providers do the data integration and analysis. They don't necessarily do tokenization, or they don't provide a trading platform or something along those lines. Another difference is there is some difference as you start to get into the weeds of how data is analyzed. The most obvious I think I can suggest is the application of mass balance equations to establish the carbon footprint at each stage of the value chain. I don't think that's being done consistently across all providers. And so to the degree that that matters, that's an important distinction. And then maybe finally, what distributed ledger technology is employed seems to vary actually a fair amount across all the providers we looked at. So those range in terms of privacy enablement. Are they public blockchain? Are they privately enabled blockchains? Not all are on blockchain per se at all. So again, there's some distinctions there. The implications of them, again, privacy and data enablement. There are probably some other things that I don't appreciate that are important about the difference in that decision. So sorry, that was a pretty long answer, and we can come back to those.
I mean, you're trying to, bring to everybody's journey of how we get from here to there. I mean, like for us being a technology company, our first client said, hey, I'd like to have some sort of proof. And they had looked at some of the existing options and said, hey, what about this methane performance certificate from S&P? Well, that sounds pretty legit, right? And it, had this whole methodology, and we thought, well, we can write software to do that. Well, we're going to have to tap in directly into your IoT devices off of SCADA, do this measurement. It did not specify mass balance, but we hired a chemical engineer and said, well, I'm a mole chaser. The only way to do this is mass balance. So this is, physics at first principles. Okay. So we go down this road and we do that. And then, we do the methane performance certificate. And then, the company we're talking to, Expansive, said, well, you got to market those yourself. So we went to an energy trader and bought some, don't care. Which leads me to my next question, like, okay, well, what do you want then? If you don't want these MPCs, what do you want? Well, this Inflation Reduction Act, we think this is going to move empirical. Therefore, we're looking for more regulatory clarity. So we don't want to buy those MPCs. Okay. And so our next evolution was another client came up and said, hey, I actually have a buyer for this thing, but I got to have mass balance, number one. And I got to get this 14067 thing done for this European buyer. Okay. So we dig in and we do all that stuff that leads us down that path. And so we did that project. And then, then we thought, hey, let's pair ourselves up with an actual energy trader. Let's not make this mistake of creating something that nobody wants to buy. Mm-hmm. And energy traders, if you know anything about them, which it sounds like you came from that background, they love making money. And they're not going to do anything where they don't have, okay, I got a buyer here and I got a producer here, and I got this thing in the middle that needs to be solved. So that's when we met it with Gunvor, and they said, hey, can you ISCC? And we said, okay. So I'm digging into it really quickly and said, oh, good, they require 14067 with mass balance. We already did that. Sweet.
Right.
And,
right.
and it led down there, and now it's led the new ISCC CFC, which is a brand new certification that they have in there. But all the while, underneath is saying, well, what do we call this piece of data? And the industry seems to have standardized on what you said, the EAC, the Environmental Attribute Certificate. So, okay, now we know what we call it. We got, just regular old commodity gas. We do this process in the middle of mass balance and providing certain data. We produce a certificate, and then the traders now have something they can trade. And then there's a bunch of other rules and stuff that kick in, because we're also helping. There's another certification called ISCC Trader. And that certification allows the trader to trade certified feedstocks. So now they can do feedstock blending. Like, say, I got empirical natural gas, empirical RNG. If they're both empirically measured, both mass balanced, both certified, I can now combine them to create a different CI score for the end product. So thus, you can have now, as you mentioned, people taking trees in Africa or something, did a carbon credit, regular old natural gas, combine and call it net zero gas. The future says, well, that would call an offset strategy, carbon offsets. So this is an inset strategy. What if the actual thing you consume is net zero? By combining,
That's right.
A negative CI score RNG with a positive CI score natural gas, and now have something they can actually consume that product. So anyway, it's evolving, and all I'm saying is, you had to take a snapshot of a moving truck.
Yeah.
And
Yeah.
it's evolving in the future, and you can kind of see where it's come from. And you took this snapshot, which is your report here, and I appreciate that. I can identify from making changes on a moving truck along the way. So
Sure.
So speaking
Well, we
of
try
that,
to acknowledge. We try to here. I'll just answer.
Yeah,
Just answer a couple things, then we can keep going. I mean, we try to acknowledge that the truck was moving, I guess, to stick with your analogy. And the early tokens have evolved along with it, and the capacity has evolved along with it as well. So, for example, I guess the most sort of public facing change, earn there were two tokens, as you know. There was the MPC, and then there was the EARN DLT Certified Emissions Token, CET, which was then updated, if you will, to a quantified emissions token, which was supposed to be sort of a little bit of marketing, I guess, but a recognition of the idea that whereas the industry was heavily reliant on these emissions factors 4 years ago, a lot has changed. And so there is a little bit of a blur. This is not binary because you have measurement informed, and there are still estimates that have to happen. We're not in a place in the US or anywhere probably where every step of the value chain is now perfectly quantified or something. And there's an element of data analysis, and therefore you still have to understand kind of how that happens anyway. But the point is they introduced the quantified emissions token, right? The QET. And I think what's happened for all of these other providers, for all the providers in general, is they have also taken the steps, as you were describing, you had to integrate, okay, what's the protocol? What standards should we use? It's not just saying, oh, you got to use OGMP or you got to use the ISO 14067 or whatever, but it's then integrating that into the data analysis itself and making sure that that's compliant. So I think the industry is evolving, I guess I'll say nicely. And so you have multiple players that are stepping up into a more sophisticated offering that hopefully Gunvor and other traders can feel good about using. But it's interesting to watch that.
I think, and you pointed that out, right? So, the idea that you got these three or more parties, right? You got the regulatory who's saying, hey, I want this. You got the market driven stuff, which is more voluntary, like, OGMP or whatever. And you got a bunch of people saying it. And then you got the technical people who say, hey, here's a technical solution to it. So what do you see the challenges are bringing these three groups together, right? Market, regulatory, technology.
Yeah, it's a good question, and I guess I'll try to do something quick that's maybe doesn't do it all justice, but I think if you can start with the market trust, then the other pieces can fall into place. So, and that's a little harder now because I think the history of responsible sourced gas was compromised by that early experience. I think there was a lot, and by the way, it's probably compromised by the voluntary carbon market and other things more broadly in the environmental space. But you've got the complexity of, well, this player was certifying their gas based on this process. It might have been an MIQ process, but even more importantly, it had these emissions factors and this estimates and this, that, not being measured. And some other player was using a different system, and you had different players arguing that their processes were more thorough and the other guy was not as thorough, and all that stuff. And it just takes a long time for the market to filter that, get comfortable with those pieces, and accept, yes, this is valid, this is real. At the same time, the whole point of the tokenization, right? And the whole point of putting it on a blockchain or something is to make it all public, right? You have this challenge of making a lot of calculations public and comprehensible, but at the same time, if you can manage that, if the industry can manage that, then the processes, the assumptions, the steps, they all become public. And so that's how you engender trust, right? That's the goal. I just don't know how long that takes. But I'm assuming the regulatory, look, the EU is driving a regulatory push, right? To sell the LNG, it's going to, by 2030, it's going to have to be 0.2%, fugitive methane emissions intensity, blah, blah, blah. The rules underneath that are, there's a lot to be developed, and there's only so much specificity, and you guys have to figure that out along with the ISCCs and the ISOs and the like. So I think that follows. Technically, I don't know, you probably argue that you're probably more or closer to where you need to be than the other two elements are in place, I would imagine.
Which gets to the next thing of like, okay, so working with buyers and stuff like that. So what's the demand then from the LNG that you saw? Like, I don't know if you talked to any LNG traders or buyers who said, hey, I want these EACs and I want them on the blockchain by such and such a date. Or was it just like, we think that's coming down the road?
I have to say, yeah, our emphasis was so much on just let's get our minds around what's happening to produce them and what it takes and the different offerings and the like, that we didn't get so much on the reception on the other end.
Yeah.
So I can't speak to that as well. I think I have heard enough to know, and maybe this is pretty intuitive, that the buyers, let's stick with the EU and the LNG buyer out of the EU, and they need to be able to demonstrate to their regulator that they have a real emissions label, and one that they can trust, one that they can, if asked, they can show the supporting detail behind. So I know that that's the ask. And so you have US LNG providers trying to figure out, well, what does it take to satisfy them? And how do they do that? And what do these emissions labels look like? And how is it both simple and adequately complex, all kind of at the same time? So, and the procedures, those are all part of that. Understanding what ISO protocols look like and all of that is all part of it. For traders, in a sense, of course, it depends on what we're talking about, but of course, there are middlemen traders that are actively going to be buying US product and trying to sell those into Europe. And so I assume that their demands are the same, right? Effectively, they're very used to handling some of the other issues in terms of trading the attributes or the gas, in terms of the counterparty risks and all that stuff. So sure, they're going to have to, the what I'll call the know your customer aspects to this, yes, they need, but I presume that they figure out that's relatively straightforward for them to implement. But again, let's sort of filter from traders. We're still talking in a sense about bundled product. We're talking about actually selling physical LNG, but these environmental attribute certificates they can be split off, presumably. They can be traded independently. Think about how like renewable energy credits are traded. Very large market for those, very liquid, deep. That just requires a broader trust in the practices behind the EACs, right? So again, it's going to be backed up by the ISO standards and the other standards, but once a faith can be developed in that, then I think you have the standardized tradable product.
So you mentioned, okay, so the thing that creates tracks and stuff like that, the EACs, is an MMRV system. So what characteristics did you see in MMRV systems that you think are needed to create these trusted EACs?
I think it's a really important question because
we should probably define
measure, right.
Yeah.
It's measurement, reporting, verification. Wait, I'm missing an M. What's the
monitor, measure, report, verify. Yeah.
Thank you. Yeah, there you go. It's hard for someone outside the industry to appreciate that it really isn't so simple to do this, at least at a reasonable cost. There are measurement devices that can be placed on site, and I think there's a perception like, oh, okay, good, fine, just measure. But how many there need to be, where they need to be placed, how high off the ground you need to place them. These are all considerations. It's generally thought that those should be supplemented by other forms of measurement. Sort of think about the flyover, whether it's drone or satellite or aerial, right in between, and how frequently those have to happen. You're trying to build this sort of composite picture of the measurement profile through 360 days of a year. Once you have those, of course, they do all need to be integrated and tied to things like the ambient condition, which way is the wind blowing, right? Because that's going to matter a lot for what's being measured and when. I'd actually be remiss. This is the part that I'm supposed to, I have to plug my own institution here. So the Colorado School of Mines is actually a leading light in this data integration and analytics work, specifically led by Professor Dr. Dorrit Hammerling in our data sciences department. So not in our petroleum engineering group at all, but it's real heavy data analytics work. She's doing this cutting edge work, working with a number of oil and gas producers in the upstream, developing analytical processes to pull all this data together. But anyway, so then that reporting of the data has to be clear. And since it's so much data from so many different sources to be integrated, it is challenging, right? And so I know that's exactly what you all are engaged in, but you're integrating all of these different sources of data and pulling them in. You have to timestamp them and kind of do all of that. So because of those challenges, let's get to the V part, right? So it's the verification. And I think having the independent verifiers that are educated not only in oil and gas, but also in the data analytics processes, this is what's critical. And I do believe that I'll highlight another player in this, but Future, for example, which was, is a derivative of Expansive, which formed the MPCs. They've now put a lot of effort into sort of the independent verification because they understand just how important that is. And I'm not saying the others are not. That's a lot of what I've seen from them is stressing just how important all of that is. So.
Yeah, and ISCC is a big deal too, and
Yeah.
14067, but ISCC in particular, you have these certified bodies, they call them, and they go through all this certification process, and they have to have X number of certified people to handle the different things. But what's been interesting getting in the ISCC world is how big some of these certification bodies are. Like when we're working with SCS Global, 2,000 employees. Okay. Intertech,
Yeah.
same thing. They're worldwide, global. They've been doing certification for a long time. So it's one of these things when you get outside of the US bubble, this is a relatively small deal. You get to the international certification bodies, and they're massive and they're quite sophisticated. So it's actually nice, to tell you the truth, that they
they know what
really
to do, right?
Yeah, you talk about mass balance or this or that, and they go, yep, tracking. Like, yeah. I mean, if you go to an ISCC conference, you might as well call it a mass balance conference. Like, nothing happens without it. So that very thing that we thought we were pushing the envelope on is like the entry level. Like, yeah, mass balance. It's what you do. Like, you don't even get to play in the ISCC world. That is your table stakes. Now you go from there. So it's a really different world. But it from our point of view and the chemical engineering point of view, it's super welcome because a lot of the things that were left holes and some of the other things are actually answered in these international standards. So that's a good thing.
Got it. That's interesting. Thanks.
No, I did appreciate, in the report, you did mention us and you said, hey, we're the one-stop shop, which was which was great. It was a good positioning because that MMRV and the T, the trading platform, you're right. For us, it is all integrated. And we just couldn't see, to be honest, we would run into some clients who are struggling putting no less than 8 different systems together. And if you know anything about system integration, that doesn't make it 8 times harder. It turns out like 45 times harder because this piece goes to this piece and this piece. It's kind of a complex deal. So we've been really fortunate with fantastic early adopter customers who said, no, I want this thing, figure out how to integrate it. So it's been nice. So how do you see the role? Like you mentioned the certification, right? ISO, ISCC, and the key to those guys is building the trust, right? And there's a book out written talking about business moves at the speed of trust. So, how quickly will that trust be built? And, how do you see that evolving?
Well, I certainly agree with what I think that, your thrust is, which is that the backbone of building that is going to be the working with the entities and getting like ISO and ISCC to validate the processes and say, yeah, this works. I don't see another way around it. I don't know that I have a sense of time and how long things take. I just don't know that I have it. I mean, there's a lot of push. There's a lot of impetus. Again, I'll lean on the EU, right? And their standards. There's a lot of impetus to kind of get things moving. And so those buyers want to have a system that they can believe in. That's helpful, right? This is not about foot dragging or purely a voluntary system, I suppose. So that's very helpful. And I also, I guess I might imagine if I understand it right, you can help me. ISO or ISCC, these are relatively generic, right? We're talking about how to deal with a process operation.
Yeah, they're technology neutral. Yeah.
If you can layer in the OGMP, 2.0, level 5, then you start to get very specific towards the industry. So if you kind of marry up the two, then the path is laid perhaps or getting closer, maybe that's probably the right way to put it, is getting closer to having both the specific marry up with the general processes. And maybe that's, and people are like, yep, okay, I get that. And you can start to engender that trust.
I have some stories there, but I'll save them. So in your view, does, tokenizing LNG environmental attributes improve the end goal of the climate accountability, or risk creating just a whole nother layer of complexity where, people, well, I could just imagine, bring it real, right? Mr.
Yeah,
Trump
yeah,
negotiating with the EU saying, hey, you're going to buy $750 billion of LNG from the US, right? Yep.
right.
And you're not going to burden them with these regulations that your own people can't even deal with.
The world we're living in allows for scenarios like that, right? If he's made aware of it, yeah. But if you're asking, and I think you are, is it like, does it improve global accountability, or does it risk creating complexity?
Or
I mean,
can
I
you
suppose
just do both?
the answer is yes, right? I think
Yeah.
ultimately it is. I don't think I need to say this, but I guess we haven't said it yet. Methane is a very powerful greenhouse gas. Measuring and reporting environmental attributes of natural gas is just a critical component of understanding countries or companies or individual users' carbon footprint. You can't not do that. If tokenizing is just a very solid way of having that carbon accounting be available to all of the various constituents that need to be engaged in understanding that footprint, great. I mean, that's how it happens. Of course, the actors we're talking about aren't just buyers or sellers or traders and middlemen, but lenders and investors. I mean, they maybe less in the US than what we were heading towards, right? But that's important to their lending and to their business making and investing portfolios too. Yes, it creates more complexity. It clearly does relative to not tracking it all. But I guess the only answer is that you and various others are working to create systems that ease that complexity, right? You're dealing with hopefully smart contracts through distributed ledgers that helps ease the complexity overall. And then I imagine you're all working on user interface to see and diligence and exchange the tokens. Those are all going to be critical in not making the climate accounting more complex than it needs to be.
So if somebody read your report, they're an LNG producer or they're somehow involved in the supply chain and they're like, okay, what do I do now? I've read this and I've seen this kind of stuff. Where do I go to kind of get ahead of the curve? Because yeah, my concern would be I'm in 3 years into a 20-year contract and the buyers, let's say Europe or Japan goes, nope, everything from this date needs EACs.
Right,
And now
right.
they're like flat-footed because they haven't really built that infrastructure yet. What would you recommend they do?
Well, I guess I don't know of an alternative to getting the handful of providers such as CleanConnect.ai kind of in front of them and walking through what would it take to adapt your system to do this, right? I really don't know of an alternative. And if if I'm acknowledging that at least at the level of intensity that I looked at it, based on my background, I wasn't quite able to say, oh, you got to go with this one or you got to go
Yeah,
with that
sure.
one, right? It just wasn't. And perhaps there isn't, perhaps all of there are going to be merits to individuals working with some different firms. There's slightly different answers. I can tell you that when we talk about those distributed ledger technologies, some of those seem to be very much catering to certain audiences. So again, I don't know that I really want to, but some are really focusing on financial systems or financial services industry. Others seem to be a little bit more focused on broad, public blockchain, almost everything's open, and we'll just deal with private enablement a little bit. So I think companies may have to sort of find their own way at the end of it in terms of how it's managed and what works best for their own systems, as well as at some of the early stage in terms of, are you comfortable that this firm is getting the adequate verification? Yep, that it's ingesting it well. Can we compare data analytics systems and all that? I guess the point I'm trying to get to is I do feel like there's legwork, especially because you're still an early adopter, or the firm we're talking about is still a relatively early adopter of these systems.
So, I mean, there's no way to really know, but just crystal ball it like, okay, so by 20, let's say, what date are EACs pretty much standard in every LNG transactions?
Well, gosh, I guess one way to answer that is, again, I'll poke to the EU because they're really sort of driving the process. But by 2027, there's supposed to be some form of emissions label. Now, again, I don't know rigorous, or if there's a little bit of an allowance for that to evolve into something that's more rigorous, that may be some wiggle room there, but that's not very far away, obviously. And you need to have something that a buyer can feel good about presenting to the regulator in the EU to say, this is what we're buying. This is the methane intensity of what we're buying. And it doesn't have to meet, the point is, before 2030, it doesn't have to be below a certain threshold. You just have to start reporting it. But that means that these systems have to be implemented, or else, you're kind of back to, well, let's, using the emissions factor, we think it's about this, and presumably that's not good enough. So soon. I mean, right? I mean, the short answer is, like, this has to start really kind of getting going, it seems to me.
Well, Brad, I really appreciate you going over your paper. Again, there'll be links to it below in the show notes, and kind of giving a little insider look behind the report, kind of how,
Sure.
And so really appreciate it. And I'll have all your contact info below there as well.
Okay.
And
Great.
I totally recommend for anybody watching that, if they want to go deep, your in-person events are a great place to take, your education to that next level as well. So.
Well, I thank you for this opportunity. Yes, I encourage anyone to read the paper, and I'm at bhandler@mines.edu. You said you'll have the contact information, but it's very easy to find. It's pretty intuitive. I'm happy to try to help anybody along the way if we can. So please don't hesitate. But otherwise, yeah, this was great. And I, again, appreciate the chance to chat.
Excellent. Thank you.
Thank you.
The Empirical Energy Podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.